Ladies and gentlemen, good day and welcome to the Finolex Industries Q2 and H1 FY'26 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Arun Baid from ICICI Securities. Thank you, and over to you, sir.
Thank you, Mark. Good afternoon, everybody. On behalf of ICICI Securities, I welcome you all to the Q2 FY'26 result Concall of Finolex Industries. We have from the management side Mr. Udit Agarwal, Managing Director, and Mr. Chandan Verma, CFO. Now I hand over the call to Mr. Udit for the opening remarks, post which we'll have the Q&A. Over to you, Udit.
Good afternoon, gentlemen. Good afternoon, gentlemen. Thanks, Arun. Good afternoon, ladies and gentlemen. Welcome to the investors conference call for quarter 2 of FY'26 and H1 FY'26 earnings release. We thank you for your continued support and interest in Finolex Industries. Finolex Industries has registered a marginal dip in volume during the quarter and also for the H1 of this current financial year, mainly on account of prolonged heavy monsoon. The operating performance of the company has been notably improved during the quarter and also during the first half of the year due to our continued focus on margin and also operational efficiency. The company's endeavor, as we have been saying in the last conference calls as well, is to grow in the non-agri segment is ongoing. And we will also talk about a little bit more about it as we go forward in our Q&A session. But before I open the floor for Q&A, I want to take you through some of the performance indicators. So Q2 financial year 26, some of the highlights are as for quarter 2 FY'26, the volume, as I mentioned, decreased by about 6% to 65,336 metric tons against the 69,341 metric tons during the same period last year. Total income from operations has improved slightly, about 4% to 859 crores for the quarter as against 828 crores for the same quarter previous year. EBITDA, we have seen a significant improvement in our EBITDA margins, which has gone up to 130 crores against the last year same quarter of 11 crores. PAT also has gone up to 119 crores against the 51 crores in the same quarter last year. So the highlights for the first half are that overall volume in the first half has been down by about 2% to 1,57,645 metric tons against nearly 1,59,961 metric tons in H1 of the previous year. Total income from the operations is also slightly down to 1,902 crores against 1,969 crores last year. EBITDA has improved by about 3% in the first half to 224 crores as against 217 crores of last year. Correspondingly, the PAT also has changed, but to 216 crores compared to 557 crores. But let's remember that 557 crores of first half of last year also included exceptional gains of 417 crores. We continue to, as a company, we continue to have a very strong balance sheet with a net cash surplus of around 2,360 crores as on 30th September 25. I think with this little overview on the numbers, I would leave the floor open for questions. Together with me is my colleague Chandan, and we would be very happy to respond to the queries. Thank you.
Thank you. Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, first, wanted to understand this change in inventory, which is 172 odd crore negative, and that's why there is a significant improvement in the EBITDA and EBITDA margin. So couple of things to understand here. First, how much is inventory gain in this quarter? How much one can look at to reverse in the third quarter? And if we exclude this, then what kind of a margin, EBITDA margin, one can now look at from third quarter onwards?
Hi, Shravan. Good afternoon. So how we look our number, so if you compare our gross margin, so looking into the inventory number directly, inventory changes will not give you the right perspective. How we should look into the gross margin, what is there in the current quarter and what is there in the earlier quarter. So if I give you the perspective, our gross margin during the current quarter stood at 42%, whereas the same number of the corresponding quarter of the previous year is 30%. Number one. Number two, having said that, so this inventory gain and loss as such is not directly in the quarter, but the number you can see in the financial result is only on account of what is the inventory that we have been carrying at the end of the previous quarter versus at the end of the current quarter. So inventory gain or loss per se we do not have in this quarter as well. Number one. Number two, as in our opening remarks, Mr. Udit has mentioned, we have been continuously focusing in our performance evaluation and focusing on the margin. So based on that, we will continue to give our endeavor to keep the EBITDA margin to the extent possible at this level. We'll try to maintain that.
That's a great thing, sir. If you can manage such kind of a EBITDA percentage, 15% plus, it's a great thing. Another thing is just to further understand here in terms of the realization. So if I look at on QOQ basis also, so there the realization has significantly increased, kind of a 16%. So a couple of things to understand there. First, if you can also share the agri, non-agri share, and also though the overall volume has declined, but in that also agri, non-agri growth, and from where this realization increase is coming, and how now one can look at, even if let's assume there is no ADD, then this kind of a realization is sustainable.
So, Shravan, as we have mentioned, during the current quarter, our volume is in overall basis down by 6%. And if you make a breakup of the 6% between agri and non-agri, actually because of the prolonged monsoon, we have suffered a setback in agri segment, whereas there is a plus volume of around 7% in our non-agri segment. So on overall basis, there is 6% decline, but this is largely contributed by the agri decline, but non-agri we have registered a volume growth of 7%. And in a quarter-on-quarter basis, the ratio between agri and non-agri, current quarter it is 56:44, whereas corresponding quarter of the last year it was 61:39.
Okay.
So as we go higher, as you know, as we go higher in the non-agri segment, non-agri generally gives us the larger in terms of realization. So, and agri is the sector where we get the largely volume. So as we will be able to push our volume in the non-agri sector, our realization pattern is definitely going to be higher on overall basis.
Got it. So compared to Q1, QOQ, the non-agri share has significantly increased from 30% to 44%, and that's why we have seen a significant increase in the realization.
Yes, Shravan.
Yeah. So now how we look at from the third quarter onwards, because our endeavor was to have a 50% agri, non-agri share. So this kind of a 56, 44% share, that kind of a can be maintained in the third and fourth quarter?
Shravan, the third quarter, fourth quarter, we also see a significant demand growth in the agri segment. Quarter two, we all know, is because of the monsoons, there is always dull demand in agri segment. So that's why you also see that reflection in our share of volumes with agri versus non-agri. Yes, our long-term endeavor remains in that direction, that we want to have a fairly good dependence on both agri and non-agri, just to manage the seasonality in the business. But I don't think we would be able to maintain 55-45 or that kind of a thing, unless there is a significant shift in the demand.
Broadly, because the entire in terms of EBITDA now depends on this non-agri share. So roughly, if somebody has to understand how one can understand for the second half, because if our agri share goes up, realization again will be a dip, and that will obviously have an impact on the EBITDA margin. So in that sense, wanted to understand.
No, but there would also be a volume growth. Yeah. So that will also drive the margins or the margins. Yeah. But right now, if you look at it, our quarter two traditionally will be a lower volume quarter. Yeah, because of the monsoons. Yeah. And as we move into the quarter three, there would be demand for this will come back, agree. And that will also help us to improve the volumes. So I think we would be able to sustain the margin in the current percentage range.
Got it. So in terms of on the volume front, so 1.6% degrowth. So previously we were looking at kind of a high single digit to double digit. So that means we should be having a 18% kind of a growth in the second half. So now how one can look at the growth in the second half, or maybe for full year, what we are looking at, and maybe if you can help us going forward also, because we were looking at double digit kind of a growth, given now the PVC prices are kind of bottom out, and maybe ADD will help there also.
Yes, certainly I'll answer the ADD will certainly help. We'll get to know probably in the next 1 week or so, hopefully this week, what is going to be the outcome of the decision from the government. So that will certainly help. You are absolutely right. The second part or the first part of your question, which was outlook on the growth. So yes, I think it would be fair to say that we are now looking at a mid-single digit numbers in terms of our growth forecast for the year.
But going forward from FY'27 onwards, we can see a kind of a double digit kind of a growth that's kind of a sustainable.
Yeah, I think as you know, our volumes our business is dependent on agri and non-agri. And non-agri, when we talk about, we also talk about a lot of infra-related projects and the real estate developments which are happening in the country. So as long as that thing continues, I don't see any reason why we should be doing less than the market.
Okay. Lastly, sir, what was our CPVC volume share, and maybe if you can help us the growth in Q2 for us?
In Q2, our volume share was about 8%, Chandan, if I'm right?
8%, yes.
Yeah.
We have been able to contribute 8% in the CPVC segment.
And their growth will be a 5-7%?
No. CPVC is growing at a higher rate because we have a lot of endeavor on the CPVC segment. It is going to double digit at a rate of double digit.
Okay. Thank you and all the best, sir. Hope we should be able to maintain the double digit growth and maybe going forward under 15% kind of EBITDA margin. Thank you and all the best.
Thank you, sir. The next question is from the line of Sonali from Jefferies. Please go ahead.
So thank you for the opportunity. Some bookkeeping questions. Firstly, what was your PVC to EDC spread in Q2 FY'26 versus Q2 FY'25? And also Q1, if you could give us.
PVC to EDC, Q1 it was $522 and current quarter it is 535, sorry, my bad, 535. This is PVC to EDC. And another one is what you have been asking? PVC to VCM.
PVC to East VCM, yes.
Yeah, 151 versus 187.
Understood. Sir, and what is the PVC to EDC spread right now as we speak?
Right now it's roughly around 535.
So almost close to the average of Q2.
Yeah.
Understood.
Yeah.
So secondly, what were your average prices for PVC and EDC and VCM during this quarter?
That detail actually we do not disclose. That is the actual at what rate we have procured our VCM and what is the procured rate, because it is a three factor that plays a major role. One is the market driven price, plus at what rate how we are negotiating with our supplier, that also depends. So that is something that we do not disclose to in public.
No problem, sir.
So whatever that number I am giving you, that is it's a more or less it gives you indication.
Understood, sir. Very well understood. So my last question is, now first quarter was 9% EBITDA margin, second quarter is 15%, despite volatile PVC in Q2, and you explained the reasons for that. So Q3, Q4, how should we look at the run rate? I'm not asking for an estimate, but approximate run rate. Should we go back? Do you foresee us to go back to Q1, sort of less than 10% EBITDA margins, or maintain sort of mid-teen EBITDA margins?
So on a full year basis, we would like to maintain a higher digit. It's our guess, higher digit EBITDA will be achievable. So 15% is the number that we can see for the current quarter. However, on the overall basis, higher single digit is more or less achievable.
The higher single digit you said for the full year. Is that right? Hello?
Around you can say around 10 to 12% around. Bottom
for the full year.
Yeah, for the full year.
Full year EBITDA margin, and you're saying mid single digit volume growth for the full year. Is that right?
Yes.
Understood, sir. Very clear. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Praveen from PL Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity.
Sorry to interrupt. Sir, your voice is very low. Could you please come closer to the mic?
Is it fine?
Not really.
Just a second, sir.
Hello?
Yeah.
Am I audible?
You need to be a bit louder. Your voice is quite faded voice we are getting.
Just. Hello?
Yeah.
Yes, it's better.
Okay. So now my first question is related to what you had said about the agri, non-agri segment. Is that the bifurcation for the volume we had given or a value?
Volume. We always give a number, whatever the number we are giving in terms of volume only.
Okay. Second thing is on the PVC and the VCM route, I recall that there is some procurement challenges. How that is, like that's normalized or still you are getting some issues?
Yeah, you are right. There were some structural issues which are going on globally in terms of the VCM market, and we are trying to work through it via long-term contracts. Yeah.
Okay, so we are not facing any challenges related to procurement of VCM right now.
I'm not saying that there are no challenges, but as I mentioned, we are trying to work it through the contract so that we had continued supply of VCM for our operations.
Right, sir. Second question is related to the capacity. what capacity right now we have for pipe and fitting?
For pipes and fittings, yes, Chandan, go ahead.
Yes, pipe and fitting altogether, it's 5,20,000.
Okay, and that we are expected to maintain for a full year.
So capacity is definitely installed capacity I'm talking about. So 5,20,000 the capacity. If you can recall in our earlier call, we have saying 25,000 of the latest capacity we have done addition in Q1. So this is the by after that our total capacity stands at 520 at this moment.
Okay, sir. Second thing is on the agri demand as an overall. So definitely I understand because of rain and Q2 got impacted seasonally also it's low. But and overall how you are seeing the agri demand is playing out right now?
Agri demand, as you know, this is impacted because of not only the early onset of monsoon, but also prolonged monsoon. We are still having rains in some parts of the country. And so that has a continued impact on our volumes as well. But I think on an overall basis, we don't see such a decline in the demand overall. It should come back, and when it comes back, would also be a pent-up demand which also be there. So I don't think there was going to be any significant impact on the agri demand.
Okay. And one clarification, sir, you said related to non-agri, you are doing infra as well as real estate projects. So any bifurcation or any color on that? How much is the infra contribution and where you are going to see the infra contribution the way forward?
Praveen, as you might already know that we do most of our business through channel partners. We do not supply directly to these kind of projects. So it's very difficult to really put a finger on how much is coming from infra, how much from real estate segment. But that is something which we call as our project sales, and we see that there is a momentum in that area. Yeah. And that also drives our non-agri sales.
Got it, sir. Thank you and all the best.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. The next question is from the line of Ritesh Shah from Investec India. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, couple of questions. I wanted your broad thoughts on one, how are we looking at our market share in volumetric terms? That is one. Second is on the use of cash, any particular timeline that you have in mind on how we will go about it? And third, any specific changes at the company level that you aspire for, say, over the next 12 to 18 months, 12 to 24 months? Specific question that I had over here was, we have indicated in past about the variable component for the employees. Has there been any progress? Do you think that that is something which is required? So these are the first three questions.
Ritesh, Chandan here. So just to update, because PVC market, PVC pipe and market is a very mix of market where there is a organized player and unorganized player both. So considering this, it's very difficult to give what is the market share that we are having. Having said that, if you compare ourselves with the three major players, like Astral, Supreme and Finolex, in that scenario, our share roughly comes out to be 25%. If you compare ourselves with the three big players in PVC pipe segment, largely. Number one. Number two, your question was cash utilization. Definitely that question all we have been saying quite some time, because we have, at the end of the day, we'll have to see how the cash is best getting utilized over the deployment in our internal requirement as well as capex utilization. After that, something left out, that has to be go back to shareholder in whatever form that is suitable. Third, the stock option, that is very old scheme that was very I think 4 or 5 years back, or probably 5 6 years back, we have decided something to give the option to the employees, but it is not materialized at this moment. It is on rail at the moment.
Is there any timelines on the usage of cash on books? Because
almost like 2,400 crores of cash sitting on the books since quite some time. Sir, any timelines in place over here, sir?
Ritesh, is very difficult to put in a timeline because it depends upon what kind of planning is going on in our case that is there on the table, and once that materialized, that goes for the multiple level of approval, including board. Then we will be able to conclude to what extent we will be able to utilize and by what timeline.
Sure. Sir, variable component for employees, I was referring to marketing and sales, not the ESOP part.
Okay, sorry, my bad then. Yeah,
variable. Sir, any progress over there? Yeah.
No. So at this moment, we have not yet decided to go ahead with the variable component. So when next year this appraisal cycle will come, then definitely we'll look into. At this moment, it's not yet decided. Currently, we are working upon the switch to fixed basis only.
Sure. And last question, where do we procure CPVC resin from, given there are a lot of new capacity announcements locally as well, and there's new incremental capacity. We understand Reliance is also putting up something this month. So is it something that we have factored to basically if we are not sourcing locally, then we'll start to source locally? What bearing it will have on working capital and the sourcing cost?
So we have already been, it's not like that we are not buying from Reliance. We are already buying from Reliance locally because, as you know, our capacity is not sufficient. Our internal PVC resin capacity is not sufficient.
Sir, I'm referring to CPVC. Sir, CPVC.
Yeah, CPVC also. I mean, we have been taking from all the sources, and we are constantly in touch with Reliance. So for other places, they are already buying from Reliance. So it's not like that we are not buying from Reliance. And it is not only Reliance, there are other producers also, as you rightly mentioned, there are capacities which are coming up. And we are in touch with everybody and trying to evaluate and improve the suppliers as we go along.
Right.
So,
just
it would always be a mix of local versus imports. But I think, my estimate would be that going forward into the future, probably dependence on the imports would be reducing more and more because of the local capacities coming up, not only by the Indian producers, but also some of the international producers like Lubrizol trying to do something locally here in India.
Okay. Sir, possible to highlight which are the new PVC and CPVC capacities which are coming up in India over next 2 years?
I will mention just one name. Lubrizol, right. Lubrizol is international. There is, the couple of players in Gujarat who are coming up with these kind of capacities here in India.
Okay. Anything from Reliance, sir, specifically on the CPVC side?
Reliance would also be putting up the capacity. Huh?
Okay. Sir, I'll join back with you. Thank you so much for the answers. Thank you.
Thank you. The next question is from the line of Sneha Talreja from Novama Limited. Please go ahead.
Hey, good afternoon, team. Just 2 clarifications here. One, you said is mid-single-digit growth, and does that include the benefit of anti-dumping duty and channel restocking that you're already building in?
Yeah, that takes care of. Yeah, that's included in there. The benefit of the anti-dumping is already included in there. But you see, that is the overall market correction. Yeah, that would be more or less a pass-through for us.
Understood. Secondly, what I wanted to understand was at one place you said that you would be maintaining 15% sort of EBITDA margin. On the other hand, your annualized EBITDA margin guidance stands at about 10 to 12%. So just wanted that clarity over there.
And just to correct, in the previous question we have clarified that EBITDA margin for the year we are going to maintain around 10 to 12%. So that is in line that you are asking the same thing.
Yeah, we had a subdued quarter 1. No?
So that means you expect margin cooling off for the coming 2 quarters, which would actually take care of the increasing agri mix because you are expecting improving demand from agri over the next 2 quarters. Is my understanding correct there?
Yes, your understanding is correct. Yeah.
Understood, sir. Thanks a lot, and all the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Mehul from Nayan M. Wala Securities Private Limited. Please go ahead.
Hello.
Yeah.
Am I audible?
Yes, sir, you're audible.
Yes, sir. I just wanted to know current utilization. What is the current capacity utilization?
So this year, as of currently for the 6 months ended, our total capacity utilization is around 70%.
70%.
Yes.
And what are you expecting for 26 and 27?
Next year?
For full year, 26 and 27?
This will be around, let me 1 second. This will be roughly around 74 to 75%. 27, 28.
For both the years?
Sorry, 26, 27. 26, 27.
Okay, okay, sir. Thank you, sir.
Thank you. The next question is from the line of Vishal Shah from Sameeksha Capital. Please go ahead.
Yeah, thank you, sir. Sir, what is the reason for substantial reduction in trade payable and other current liability for H1?
Reason for reduction in the other current liability, right?
Yeah, trade payable, major end.
So see,
yeah, please, sir.
so other current liability largely consists of our borrowings at the year end, at the point in time of reporting. So currently, since our procurement uplifting is low, and the last quarter we have been at the full pledge, that's why it represents the borrowing that we have in the market. So as our scale of operation is going to be higher during the upcoming quarter, then again that will be equalized in terms of our year-end number.
And creditors?
It is also the same line. So yeah, as the procurement activity will go up in the upcoming quarter, then it will also go up in the same line.
Thank you.
Hello?
Thank you. The next question is from the line of Shubham Padiyar, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir, you're audible.
Yeah, my question is for Mr. Agarwal. So I just wanted to understand, since this is his first year, so is there any short-term and long-term focus areas that he sees? And also, is there something that needs to be changed in the company or something that he thinks that can be added in the company, anything of that sort?
Thank you for the question. See, our business is, as we have been saying, is that we are a pipes and fitting producer and marketeers. Yeah. So that position remains unchanged. Yeah. So we'll continue to drive the focus on pipes and fittings. Yeah. And of course, we would be continue to be looking at the products which we would be going into these kind of markets constantly. I think any company of our size would do that. That's normal to happen. We'll continue to drive the operational efficiency. We talked about just in the previous question the capacities, what we have and what would be the utilization. There has been question about our expansion plans also. So that all will continue to drive. Yeah.
Okay, thank you for that. And also,
but structurally, I think our business is, as I mentioned in the opening, is about pipes and fittings manufacturer and marketeers, and that position is not going to change.
okay. And also, do you have any strategy at place on how do we achieve the 50-50 agri non-agri split?
Yeah, there are a lot of discussions going on within the organization about it, including the way we structure ourselves. So that is also under discussion, and so really putting a focus onto this, that how soon do we achieve this 50-50.
Because I think we've been planning to achieve this for the last 5 to 7 years, and we haven't been able to do that. So I just wanted to understand what's going to happen from going forward.
I gave you some hints around it. Yeah, We are also looking at how do we structure ourselves to be better capture this or move into that direction. So that's one such indicator. I gave you a indicator about the power, which will move into more into the non-agri kind of a business. So that's also something which we are evaluating at this moment.
Yeah, all the best, sir. Thanks, sir. Thank you.
Thank you.
Thank you, sir. Participants who wish to ask a question may press star and one on the touchtone telephone. The next question is from the line of Shashwat Jalan from Augmenta. Please go ahead.
Hello. Hi. Thank you for the opportunity. Sir, I saw you have mentioned about the full year guidance on the volume front and also on the volume mix between agri and non-agri. I just wanted to understand if you have to split it between the non-agri between housing and infra and then include an agri as well. In the second half, which segment do you think can have some sort of a negative surprise in terms of volume offtake purely from external factors?
No, it's as we said earlier also, it's difficult to segregate and put a finger on how much is coming from the infra segment and how much coming from real estate in our non-agri business, because most of our business is through channel partners, and so we do not deal directly. So it's difficult to put an estimate. Overall, we are able to say how much we are into agri and how much into non-agri. Yeah. What was the second part of your question?
Yeah, just the overall demand. You see, even demand agri in the second half.
No, I mean the agri demand is dependent on quite largely on monsoon, but that's primarily it. I mean, otherwise, at this moment there are no indicators which can have a negative impact on the agri demand.
Okay. Thank you.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. The next question is from the line of Ritesh Shah from Investec India. Please go ahead.
Sir, can you detail the CapEx numbers for this fiscal, next fiscal, and the one after that, if possible?
You want to say? Yeah. I mean, we have been saying this that on a yearly basis, we have to continue to support the growth in the market. We would be investing anywhere between 100 to 200 crores at a minimum in terms of our capex. Yeah. And that would be also the way we see at this moment would be the number going forward. Yeah.
Sir, this would be maintenance capex or would it be new growth capex? Just trying to understand how will the capacity number increase? So you indicated 520 KT is right now.
Yeah.
So can one assume this number to increase by say 30-50 KT every year? What should we consider?
Yeah. So if you look at it, out of this 520,000 tons which we have as a capacity, nearly 50,000 tons come up in last 6 to 9 months. Yeah. So that capacity addition is a continuous process at our end. Yeah. We'll continue to add this kind of capacities as to support our growth in the market. And the numbers would be in this region only, 100 to 200 crores per year.
So should we assume this 100 to 200 crores?
Maintenance capex. This is not a maintenance capex. This is the new capacity addition.
So this would be net new capacity addition, because I would presume we might be phasing out some old machines or refurbishing them. How should we look into that?
No, that's not there. I'm talking about the net capacity additions.
Okay. So, sir, fair to assume 100 KT of capacity addition every year?
I don't think so 100 KT would be necessary, but somewhere in the region of 50, 70, 80 would be more realistic. But it all depends, I mean, how the demand grows. If the demand grows faster, we are geared up to add capacities.
Okay. So second is, you did indicate that we are hopeful anti-dumping duty will probably come in a week's time. Sir, how much is the anti-dumping duty quantified at by regions, if you could provide some color? And if at all it gets imposed as which has been proposed, what is the quantum of rupees per kg increase that we see, say, for any particular grade of PVC resin?
Yeah, I mean, the impact is different for different origin material. Yeah. So what we see is that the impact could be anywhere between 3 to 6 rupees per kg, depending on the origin from where it comes.
Sir, how do we arrive at this rupees 3 to 6 per kg?
Yeah, I mean, there is an anti-dumping duty component if you look at the DGTR notification. So in the origin, and they have given a dollar number to it, and based on that you calculate. Yeah. That's why I said depending on the origin price which it comes to. Yeah, if it is, and then the duty number is there. I mean, for example, if it is $50, I'm just making up a number. I mean, for any origin, if it is a $50, then you can calculate how much it is, right?
Sure, sir. And sir, just last question. Sir, what percentage of our fittings is part of this 520 KT? And overall, when we look at the sales volumes, fittings will be what percentage of the volumes?
So, Chandan has a better handle on the numbers.
So, because in terms of our overall fitting, that comes out to be around 12% during current quarter.
This is as sales, Chandanji?
Volume.
Sales volume, 12% of the total volumes, right?
Yeah.
And sir, from a capacity standpoint, when we say 520 KT, what percent of it would be fittings?
1 second. It will be around 18%.
18%. Sure. This is helpful, sir. Thank you so much. Thank you.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. The next question is from the line of Varun from B&K Securities. Please go ahead.
Yeah. Hi, sir. Sir, on the current quarter's EBITDA, what percentage would be attributable to the resin business and how much would be attributable to the pipes business?
See, we have been reporting the consolidated number because we do not sell resins now. Yeah? So everything is for captive. So we always report it as a one number.
And eventually, we have been saying that resin sale to the external parties is no longer there, except a few needy parties are very minuscule. So whatever the volume you are seeing, it's only the pipe volume.
Okay, just actually I wanted to understand what for the current quarter's improvement, how much is due to the resin business and how much is due to the product mix in pipes? So
no, that you'll have to keep in mind because that is the reason that we are focusing only on the pipe business. So we are considering nowadays resin is only as an input to material. So whatever the volume that you are getting, there is no separate business identification for the resin. Resin is now playing as input cost for our overall pipe. So the entire business efficiency and number that you are seeing, that is attributable to pipe only. We have stopped classifying or segregating business resin as a separate business.
Okay. No, because the PVC delta improved this quarter, so there must be some benefit because of that.
Whatever the impact, either on a positive side or negative side, that you see, that will be impacting our pipe performance. No separate classification for the resin.
Okay. And sir, because since going forward, we will have anti-dumping on PVC and so the delta would increase even further. So is that not a possible case for further margin expansion on, say, on the backward integration side of the business?
The backward integration is a big petrochemical, so PVC production is kind of a petrochemical complex. So if anything you want to do backward integration, by the time it's a different kind of a capacity addition with different kind of magnitude altogether. We all have seen how the petrochemical complexes look like. So that needs a different kind of planning.
No, what I wanted to understand.
Anti-dumping, we all know, is for a specified period of time. So if you look at the kind of a petrochemical complex, by the time you start conceiving it, putting it on the ground, and you start getting production, it's got its own maturity cycle. And PVC, the anti-dumping duty is also for 5 years. Yeah. So during the life cycle of the backward integration, they would be difficult to justify returns. That's point number one. Point number two is, with all these new capacities of PVC coming up here in India, there would be sufficient local capacities still be available for us, for the resin to be available competitively. Yeah. And this was one of the questions in the earlier, one of the participants was also, is that how are we trying to manage in terms of sourcing locally our capacities. But at this moment there is no as such firm plan. There is always discussion which goes on in a company like of our size and magnitude, who already have expertise in this area and have developed it in the past. Yeah. But this is at a discussion stage. I cannot give you a timeline with when and what form we would be able to get backward integrated, if at all we decide. Yeah. Our focus continues to remain on pipes and fittings.
Okay. But just I wanted to understand, since after the anti-dumping, we'll get some margin benefit because of the PVC EDC delta, which would further, widen.
Yeah, it should support the industry. Yeah.
Yeah. But still we maintain the 10 to 12% EBITDA margin guidance. So is it possible that we outperform that number as well, post the anti-dumping?
Difficult to say. I mean, it all depends how the international players, international suppliers into India decide to run their petrochemical complexes and want to price their product.
Okay, sir. That's it.
Thank you. The next question is from the line of Ritesh Shah from Investec India. Please go ahead.
No questions, sir. My questions have been answered. Thank you so much.
Okay, thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Well, I just wanted to say thanks to everybody for attending today's call in this afternoon, very first day of the week. But if there are any further questions, we would be happy to respond to those. Please feel free to get in touch with us, and have a wonderful rest of the day. Thank you.
Thank you all participants from my side as well. Thank you for your interest in the Finolex.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.